traders, welcome to another webinar session hosted by ArgusFx. Today is Friday and we are already close to the weekend. Our today's topic, it's the so-called COG channel tool. This is a very powerful tool, but when used the right way and in combination with some other indicators. To start with, the initials of COG means center of gravity. As we all know, in our daily life, gravity is what captivates most of the surroundings in this universe. What goes up comes down, what goes down comes back up. So this main tool has to do with gravitational movements. So through these gravitational movements, you are going to be able to identify major support and resistance levels. Let's start with our very first slide. Most of you already know that ArgusFx is our today's host. ArgusFx is an STP ECN broker. And in other words, it's a broker where it benefits from the client's trading volume. And this is fair because the more you trade in a matter of volume, the more the commission for the broker. So in other words, it's a win-win with the client. The clients of ArgusFx win, ArgusFx wins also. Some of the benefits of ArgusFx is protection, regulation, no charge on deposit and withdrawals, instant funding withdrawal, multilingual support, expertise, coaching, updates, and most important of all, security of funds. And the conclusion of this slide is that an STP ECN broker is the very first step to fairness. Let's move on now to our actual slides. The topics which are going to be discussed in today's trading session is support and resistance levels, the center of gravity, some major points to focus on, the COG tool on the chart. So we're going to see, and as I said previously, upon starting this slide, we're going to see a trading session on the chart, risk and money management, which is vital in all cases, the 4 stages to trading success. In other words, what you need to know. And this slide, we have already went through it in a past webinar. And trading the COG to your benefit. So we're going to start by first looking at what do we mean by support and resistance levels. As most of you already know, support and resistance levels are really important. In other words, are 2 major attributes of technical analysis. In other words, we need as traders to be able to identify major support and major resistance levels. They help a trader to minimize the complexity of technical analysis, because there are so many ways of doing technical analysis where it's such a complexity, but with the support and resistance levels, this complexity is minimized. And how to identify these levels? Through using some very powerful tools. Price levels on charts that tend to act as barriers. In other words, when we say support, it's the level where we expect to buy a financial instrument. On the other hand, when we say resistance, it's the level which we expect that we are going to sell a financial instrument. In other words, support is like pushing the price to the upside. It does not let the price go lower. And resistance, it's a level where the price is forced to drop, is forced to the downside. Therefore, support and resistance levels act as trend lines. And the last two bullet points, it's what we have already discussed above. Support is usually the level where traders place a buy order. On the other hand, resistance is usually the level where traders place a sell order. So in other words, support is something which enables us as traders to enter into a buy decision, and resistance to enter into a sell decision. Let's now see the theoretical part of this indicator, and on the next slide, you're going to see this indicator on the chart. The center of gravity is an oscillator tool. In other words, it moves with the various price movements. We have some lines which characterize this tool. We have the green lines, which represent major support levels. We have the red lines that represent major resistance levels. We have the blue line, which is the center of this channel. And we also have the bottom gray lines, which represent the lowest support levels, and the high gray lines, which represent the highest resistance levels. So as you can see, the COG tool, or the center of gravity tool, is a tool which helps the trader to identify major support and resistance levels. But first of all, before we move on to the indicator on the chart, there are some points which we need to focus on. This tool can be placed on all time frames. So this tool can be placed on M1, M5, M15, M30, H1, and so on. Placing this tool on short-term time frames will enable you to scalp the market, something which is not advisable as per my own way of thinking. Because to scalp the market, you have to be extremely fast, and the market moves in such a momentum which is very difficult when you are trading manually to scalp the market, unless you have an automated system that can do that for you. Placing this tool on long-term time frames helps the trader to day trade the market. In other words, on longer-term time frames, you can trade at ease, you can trade with more confidence, you see more, let's say, parameters, and then you place your trade. The settings of this tool depend solely on the trader's strategy, psychology, and mental status. So the settings of this indicator can be adjusted. Never use the default settings of any indicator. All indicators, or as I prefer to call them, tools, should be restructured in a way on the settings. So never use the default settings of the platform. For this tool to operate the right way, as in all cases, risk and money management is essential at all times. Even if you have the best tool in the world, if you do not apply appropriate risk and money management, then there is no any reason to trade at all. Because by not applying money management, you put your account balance and your psychology into danger. Let's see now how this tool looks like. And by the way, these are the default settings of this tool. And as we already mentioned before, the settings should be adjusted according to your own trading style. So as we already said before, we have the COG tool. These top lines represent major resistance levels, which means that the price here is expected to drop as it has already approached overbought levels. This is the middle blue line of the channel. And here below, if the price, let's say, approaches these two levels, it is an indication that the price has already approached oversold levels and it's about to retrace to the upside. But as I said already, these settings are default settings. So this channel has to be adjusted according to your own trading style. Now let's see some risk and money management criteria, and thereafter at the end, I'm going to show you how to actually use the center of gravity in a different way to maximize the probabilities for trading success. And at the end of this webinar, whoever is interested to get these settings, just send an email at support@argusfx.com. But before we move to the last slide, let's see this slide, a very important slide. Managing the level of risk and your money is a major challenge. Not all traders apply the right money management. And that is why after a period of time, after some successful trades, one trade comes and destroys everything. It is important to have exit criteria, such as your stop loss and take profit. So in other words, when you place a trade, put your stop loss to be on the safe side. Nobody can predict the market 100%. But as long as you are 70% of the time right, then this is it. Also, place your take profit. So as soon as the price approaches your desired level of profit, exit the trade and get your money. Do not over leverage your trades. Do not place too much volume on every trade. Place the volume or the lot size that your account balance can hold. A safe investment means long-term consistency. So if you play safe, if you invest safe, then you will have long-term consistency. You will not end up being in the beginner cycle, which the majority of traders end up at the end of the day. And they always try to find what went wrong. What went wrong is that money management was not applied. Always have a formula for increasing your level of investment accordingly. In other words, let's see 4 examples on the euro dollar. If you have a balance of $1,000 and you trade the euro dollar with a lot size of 0.1, this is a very safe investment. It's like having 1,000 pips against you should your trade goes wrong. This can never happen. So a safe investment on a $1,000 is 0.1 lots. Now, if your balance increased to $1,200, the safe investment is 0.12. If your balance now is $1,500, 0.15 is the safe investment. And if your balance increased to $2,000, then a safe lot size is 0.2. In other words, you always leave 1,000 pips against you. So you always trade safe. So you should increase the level of your investment accordingly. And another very important slide, prior we move on to show you how should the center of gravity tool be traded, is money management, as we already discussed before. So your lot size investment is very critical. Then you must have an entry strategy. So you have, if you're going to use price action, you should consider the candlestick bars. If you're going to use the center of gravity, then this is your tool. Then we have risk management, such as your stop loss and your take profit. In other words, you should decide the number of pips that you will exit should your trade goes wrong, and the number of pips that you would exit should your trade is right. And the most important of all, it's the psychological stage. Many people, they trade so much, they place so much volume on a trade, lot size. As a result, they vanish their account balance and they do not have money to trade the next day. In other words, they feel that if they don't trade all the account balance today, there will be no tomorrow. But you should always think that there is also a next day to trade. Do not put all your eggs in one basket. Trade today, trade tomorrow, and to do this, you must at all times apply appropriate money management. Okay, in here, you can see something a bit different from what you have seen in the default settings of the COG tool. And remember always, observe the masses and do the opposite. Because sometimes on the charts, and rather most of the times or always, what you see, which you assume that it's the obvious, it's non-obvious. So you should try to find a way to identify the non-obvious, because the non-obvious movements are done by the banks, by big hedge funds. That's why the majority of traders lose money, because they try to trade the obvious. So the majority of traders, around 97%, they trade the obvious, which for them seems logical, and at the end of the day, instead of winning, losing money. So in this chart, what we have here is the COG tool, but only two lines of this tool, a red line and a green line. The remaining of the lines are not here. And we also have the center blue line of another COG tool. So in this case, we have two COG tools combined with different settings. The very first COG tool we are using is resistance and support level. And the second COG tool, we are using the COG blue line. So in the scenario where the COG blue line is close to the green line, it means that highly likely the price will break below this green line. In other words, it will break below this support level. So actually we are using the COG in a different way. Instead of using it to find support and resistance, we are using it to find out when the price will break major support levels aggressively to the downside to sell. If the price was at this level and the blue line was at this level, crossing above the red line, it will be an indication that the price will likely break above a major resistance level. So we are actually trading the breakouts. We are not trading the retracements. And also we have something which looks like bricks here, which is the Rengo charts. It's a further confirmation that the sell order was right. So as you can see in this chart, let's take things from the beginning. We have a major support line. We have a COG blue line of another COG tool that is almost touching this major support area. Even though the price has somehow escalated, for us, this is a major indication, this almost cross, that the price will break this major support area. So a break of this major support area will mean that the price will go to the downside. And then we have the Rengo charts, which shows the volatility. So in other words, we have the volatility. The opposite scenario takes place if we have an uptrend signal or an uptrend momentum. All right. I would like to thank you for watching today's webinar. Our next webinar is on Thursday, so approximately 1 week from now, and is all about with learning the candlestick patterns. I would like to thank you for your time. Looking forward to see you on the next webinar session.